Welcome back to Successful Living. We're joined by Greg Porcaro from Otrando Porcaro and Associates, and finally have you back here in the studio. It's great to see you.
Excited to be back, Rob.
We got lots of good stuff to talk about today.
I don't know if it's good, but
we have lots of interesting stuff to talk about. So, you know, first and foremost, like in my, you know, what I do on a daily basis, the one thing that always comes up is they're like, should I sell all my investments right now because I need to realize my long-term capital gains? And there's a lot of other stuff there, but some people actually think it's already been passed. So what I wanted to do was be able to say, you know, what does this proposal look like? What are some of the increases? Where's it coming from?
So, you know, here it is, October 6th, right? And I thought by now I'd be able to tell you what's going to happen, but I can honestly say I have no idea. You know, the original plan was broad and expensive and looks like it might get scaled back considerably, but there are some key things that I think will change. Tax rates, for example. So there's no doubt in my mind, regardless of how much they plan on spending, they're going to have to raise income taxes, and they want to increase the top marginal rate back to 39.6% for anybody that makes over 400 grand. I could kind of live with that. Yeah. The long-term capital gain issue has been a real problem, as you know, because they want to raise that rate to 39.6% plus the 3.8% net investment income tax for anyone over $1 million. And that's a lot. There's a lot. If you have the gain itself, might get you over $1 million, right? In some cases, like we have some large transactions pending, and the closing date came out. I mean, Biden wanted to do it originally retroactive to April. The last time the Democrats talked about it, they said September 13th, 21. I don't know what's going to happen. My guess is it'll be later. So the capital gain rate's a big problem. They want to increase rates on corporations, tax rates, and that will probably happen. They want to tinker with that 20% qualified business income deduction, and in some respects make it broader in terms of who might be able to take it, but condense it in terms of income level. So the more you make, it could evaporate much quicker. They want to increase the funding for the IRS so they could go after people who haven't paid their taxes yet, and that's okay in some degree. They want to give them $80 billion, and I think as long as it's focused and designed properly, so they modernize their technology, for example, put more agents in the field, so to speak, I think there's probably an investment to get back on that. I don't think it generates as much income as they projected, which I think was 300 million, billion. I keep saying millions. Millions don't matter anymore. So that's where they want to get money from. And then you've probably seen where they want to spend it. It's mostly focused, at least in theory, on helping families, you know, by keeping the expanded earned income credit, keeping the dependent care credit expanded, the child tax credit, which, you know, got rolled out this year and caused a lot of confusion. And the other ones are more complicated, I think. They want to make it a taxpayer-funded pre-K, 2 years of pre-K, 2 year of community college, and taxpayer-funded family medical leave. And I use that term because they talk about it as it's free, but it's not free, right? It's taxpayer-funded. These things, I'm not sure are the right way to spend this kind of money, but that's a big part of where the money is going to go. So we see where it's coming, we see where it's going. But how it's going to shape up, I don't really know yet.
And again, if it rolls out, do you think it rolls out all at once, or does it roll out in different pieces?
I think the later that they go, the more likely it's going to roll out effective more like January of 22 rather than November 15th, for example, 21.
But this is the goal, that going into next tax year.
Well, the goal was to do it sooner. Remember, they wanted this to happen already, and obviously that's not going to happen.
All right, so let's move a little bit into something that I know is near and dear to you. And you and I talked a little bit previous to our conversation today, but under the new law, there's something under the new proposal that bank transactions, it's either 600 or 10,000 in that range, that the government actually now wants to say that they can mandatorily just take that information from every U.S. citizen. And when you mentioned that to me, I knew nothing about it, and to be honest with you, I kind of just shook my head a little bit at it, but as I dove more into it, you kind of fed me with information, I thought it's super, number one, interesting, but number two, important for people to know, and if there's anything they can do to maybe stop this and realize what this would cause, it's worth you kind of telling them about it. So what is it?
When I heard about this, I was horrified. There's no other way. I think it's a diabolical plan that you might see on a James Bond movie, right? It's so horrible to think that the federal government would somehow think it's appropriate for U.S. banks to provide gross deposit and disbursement information for all U.S. citizens and businesses to the IRS. I mean, there isn't a bigger brother scenario that I've ever seen, right? And I don't know if any other countries have done this.
I was going to ask you that. I was wondering if other
countries did it. I couldn't find it because we might not get the truth out of some of these other countries. But I don't know if any other countries have done this to people. And I'm sitting there waiting for the explosion, right? That someone's going to be, what, are you crazy? We can't have this happen. I don't want Uncle Sam, looking at my checkbook. Nothing. I started talking to friends at different levels in my profession, and there didn't seem to be a real reaction.
Yeah.
And as of a week ago, there wasn't. But now I'm starting to see some reaction. So.
Yeah.
Biden's thought was, if we give the IRS everything, they'll figure out who's not paying their taxes correctly. It's a terrible premise because it's not even true, right? According to the IRS, 85% of the people and businesses properly file and pay their taxes. So we have a relatively low non-compliance rate when you're given the complexity.
Is that non-compliance rate the very high and wealthy, like the Elon Musk of the world, or not really?
Because the problem with that is they talk about Elon Musk and Bezos, and even in that ProPublica article, the return they looked at for Bezos was 2007. Right, so he was probably still generating losses for all the things he was
So it was all
creating.
legal what he was doing anyway.
Of course it was legal, right? Because otherwise, theoretically, you'd be in jail. So the problem is what they do is they take the scenarios and they say, well, these rich people aren't paying taxes. They don't bother to say that it's legal under the current tax system that we have, either because they've reinvested their money into projects, which means they don't have the money to pay the tax, right? Mm-hmm. So that's the concept that America's been going under tax-wise. If you make profit and you invest and expand, we're not going to make you pay taxes on money you no longer have because you built a building, you bought put some equipment in your factory, hired workers, whatever the case might be, right? So the premise is incorrect. Most people pay their taxes, and according to the Tax Foundation, almost 50% of the population only pay 3% of the federal tax to begin with. So the idea that wealthy don't pay tax is ludicrous. Right. 70% of the taxes are paid by 20%, 10% of the population.
Wow.
So everybody's paying their share. Does everyone do it right? Absolutely not, right? There's no question that there's people that do incorrect, inappropriate things, like every other thing that happens, right? Whether it's burglary or murder or whatever. People.
But the reason from their side is that we're missing these transactions, so let's get them, right?
Exactly.
The transactions. So that premise itself of let's get them and you should be doing that, you're trying to catch that 15%, you're never going to catch the full 15%, so maybe you catch a portion of it, but it opens up a can of worms to a lot of other things. And
of course it does. And the dilemma really is that it's aggregate data to begin with. So I've been through several IRS audits, and the IRS does exactly what they want to do. They get your bank accounts, they add them all up, and they say, all right, this all came in, this is on your tax return, how come, what's the difference? Yeah. And usually there's very legitimate deltas for that. Inheritances, loans, gifts, all kinds of stuff that don't generate taxable income. So if you give all that information to the government initially, they won't be able to do anything with it because it's too much data. Intercom transfers, how are you going to know, right? It's going to take forever. And so that means it affects everyone. And whether the threshold is $600, which is what Biden wanted, or $10,000, which is the Democrats said they'll accept, it still is tons of transactions that will affect every U.S. person in business, which means their information is no longer only theirs, right? And that's really the underlying problem. So from my view, I'm sitting there thinking, not being an attorney, I could have swore there was something called the Fourth Amendment, which I could have swore said that you are not, your privacy, your papers, your home, your stuff can't be violated without proper due cause via a warrant. I've never seen that written down anywhere in the context of this conversation, but it seems to me that since the IRS is a law enforcement agency, they should be bound by the same thing other law enforcement agencies are. The FBI, for example, can't just take your stuff from a bank. They got to get a subpoena or a warrant, and they got to prove to a judge.
This negates the whole thing, and they're saying ultimately the IRS is superseding what the FBI could even do.
Well, that's my theory. I'm not an attorney.
No, but in general. But so, I think the big thing is the protection of your data.
And then there's that.
Right.
So we know.
I thought you kind of said that, but yeah,
when you look at what ProMedica was able to get from the IRS, and the IRS says they don't know how that happened.
What do you mean ProMedica?
ProPublica, pardon me, the company that was given all those tax returns.
Oh, when the leak happened.
When the leak happened.
The protection's not even there, and now you're going to grab it in, and you don't even have the infrastructure to protect it. And even if you do have that infrastructure, it's possible it's not strong enough, and now every citizen has their transactions out there.
Potentially exposed, right? And they've approved they can't protect it, and there's no one been held accountable for that yet. Yeah. And the IRS said they didn't do anything, but somehow someone got in there and got a ton of stuff, valuable stuff, right? Information that should not be public, which should have upset all Americans, even though they went after wealthy Americans, because it could happen to anybody. So that's the second problem, is I'm convinced they can't protect it, ever, right? And then ultimately, there's a tremendous invasion of privacy, right? Why would anyone want the federal government to see what money comes in and what money comes out? Because ultimately, it's going to start at the top, And they're going to say, well, we can't really work with this. We need to see individual transactions. We want to know how much individual deposits were, individual checks, and where did they go. So now the government will know where money comes in and where money goes out, which in my opinion is a tremendous invasion of privacy.
Right, and where I kind of at first thought, well, shouldn't the IRS be able to see that so they can collect the taxes on it? You're not saying that. It's the privacy thing, right?
It's totally, but first of all, there's a system in place, right? We're going to give them $80 billion, hire agents, to audit people.
Yep.
Increase that if that's where the issue is. Since we have such a high compliance rate and the narrative about rich aren't paying is overstated because they pay. I have a lot of extremely wealthy clients, and I can tell you they don't feel the way at all, that they're not paying their fair share.
Yeah.
It's the fact that any American could somehow be subject to that kind of, any American, not just a wealthy person, to the government knowing what they're doing with their money should have horrified everybody like it horrified me. Because we know we can't trust them. We know it.
So now tell me what, just kind of finishing up here, what can we do, or what can our viewers do? You know, is it too late? Is it too high up that it wouldn't even matter? What can we do?
The best part about this show, what I was so excited about, is that there's not too late, because it hasn't passed, and it's important for every American, wealthy or not wealthy, whatever, to reach out to their representatives and senators and say, hey, we don't want you in our checkbook. We'll file a tax return by law, and if you find a problem with it, we'll deal with it. But you can't tell me what I'm doing, or you can't know what I'm doing with my money, where it's coming from. It's not what America's supposed to be about. And like I said, it kind of violates everything America's supposed to be.
Yeah. Now, you make some great points there. So we hope this actually, you know, opens up some eyes, and maybe people will actually make a little bit of noise.
That's right.
Thank you again. Thank you for being here. When we return, we're going to talk a little bit about protecting your credit and increasing your credit score. Stay tuned.